and it is Monday. At this point, we'll take a look at the disclosure. I'm going to actually do this recap live for the public Twitter, the private Twitter, and my VTF, just because I feel like we're in some complicated times, and I definitely want to try and just add as much value as possible. So if you want to take a quick look at this disclosure, I'm going to repost this link so everyone could start watching it now, so you don't have to like watch it from the beginning. Here it is, and let's just get to it. Times like this happen, everybody. Usually every 10, 12 years, they kind of squeeze the excess out. They they get guys that are over positioned in certain ways, over leveraged, and they squeeze the exit, and it happens. This was done, and it started out as a black swan, a biological event that came probably like December-ish, and literally we've watched the progression of it. And thank God we know all of our technicals, okay? Because before this really started to flare up and escalate, the market told us that momentum was leaving. So my name is Scott Redler, Chief Strategic Officer at T3Live.com. I'm sitting here in the Short Hills office because our New York office is closed. I'm sure if you guys are watching this, you're probably sitting in your house somewhere, not in your regular office, or if you are in your office, you'll probably only be there for another few days. And we've watched this entire scenario unfold. And if you had enough wherewithal and enough tactics and enough education, you probably would have been in a much better position you are now. And hopefully, if you're watching this, you've been watching me before, because we've been on top of this, every single day. The past few weeks, every week, I'm like, what don't we know, and what will the market react to? What do we know now, and what will the market be upset about? What's the key words? What's happening here? And that's what you have to do as a trader. And then, most importantly, you have to know your risk. You have to know your time frame. You need to know what you can handle. Handle in life, with your finances, with your family, and in the markets. And there's lots of different time frames to trade and go about it. So first, I have to give you a quick look at the VTF, which I'll put over here, because of compliance. So this is everybody talking on the VTF. If you do not have a crew, and if you do not have a community, here are 294 people that have been talking all day long about what's happening. These are all the different people adding their value or adding their 2 cents. And if you feel like you're trading alone, you shouldn't be. You could be trading with our VTF. If you look out here, I don't have any positions on, except for I do have some risk. Okay, today I sold short some SPY 180 puts for April 3rd, okay, which is about 20% below here. I'll show you, or 15. I'll show you. I'll go over those levels there. And I also did some what's called some SPY 210 and 220s, okay. And by the way, that is not for the faint of heart. But for me, I could handle it, because by Friday, if the SPYs are at 220 or 210, I wouldn't mind them putting it to me, and I could trade around it. I've done this many different times when we get into this crazy oversold state, when we're about 1,500 points below a prior low. Granted, I've been doing that on a Wednesday, Thursday, not on a Monday, but I'm very small for now. Overall, my accounts as of Friday were on the high of my quarter. So some of you guys out there call me a perma bull, that I can only be long, or whatever you want to say, which is fine, but fourth quarter, we were holding things in portfolio approach, having a great time, and with less stress. And so far in this first quarter, I'm on the highs of my quarter, probably just the same as the fourth quarter, a little different. Trading, stress, on your toes, tactical, no more portfolio approach. Trading, lots of short strategies, ways to play oversold, those crazy bounces, which doesn't mean we're at the bottom. And as a trader, you have to navigate and change with the times and change with the tape. So let's move this back over. If you go to, let's go to, where are we here? All right. So question is, oh my God, how do you know, how to switch gears? Okay. If you look here at the S&P cash, real quickly, because I think this is going to happen again, over and over again in history. I sent you out the ebook. You could look on my thing. If you're a trader and you trade for a living, the 8 and 21 day is your guide. If you're above it, You're trying to be in a portfolio approach. You're trying to hold the best stocks out there, like we did pretty much through October through even February until I went to Miami for spring break, which seems like 2 years ago. It was only 4 weeks ago. And then once the 8 and 21 day break, you reduce risk. You get more flexible. I call that getting tactical. I call that switching gears. And that was just about when the China, escalation happened. And I remember tweeting about that, saying, "Hey, my friends in China are saying that, the numbers are being understated and it's a lot more serious than people think." And people were called me a racist or whatever they want to call me. I was just telling you that one of my friends was supposed to go to China. His parents said, "Don't come. It's pretty crazy here." So I just gave you guys that info. So anyway, that was here. That was at the 8 and 21 day, right there. Major ascending channel also broke. Here was an unfilled gap. Two things combined together to get you out of your risk if you're a professional trader, or if you're, if sometimes you're not a professional trader, you have a swing account that you navigate while you have another job. And if you do that, there are a lot of people that follow me that say, "Hey, I can't trade all day long as an active trader, but I like to catch 4 to 6 week sequences or 1 to 3 month sequences, or I need to, just maneuver I only have one account. I have a, 401k. I have to have, high levels of cash at times. I can't, I have to, be my own little PM, but then there's guys who trade actively for a living. Like I have an active account, a swing account, an options account, and a box account. Those 4 accounts are different than my 401k, my wife's 403b, and my son's 529 plan, and different than my cash account that my wife had at UMDNJ that I'm using as an example, which is really happening for those who were sitting in all that cash that sold things in the last few years or maybe even before. So those are lots of different ways. I'm trying to wear different hats to in the moment, let you guys know what I'm doing. It might be wrong, it might be right as of now so far trading wise. Not today, I'm down a little bit today. As of Friday, I was on the highs of my quarter, so trading, I have to be giving you guys some great advice. As far as putting some money to work at certain levels, that we'll cross that bridge when we get there. But I have the wherewithal and the time. You have to have the wherewithal and the time, because history does tell you that the bull market does win, only if you could afford it. If you lose your job, or if you can't afford your payments, or you have to liquidate things, you're not going to be able to stay through it. Who knows? Hopefully that doesn't happen. I pray for all of you that that doesn't happen. But right now it could be a lot different than 3 months from now, 6 months from now, or 2 years from now, or not. Or the crazy bullish cases. All right, slow down first quarter, second quarter, then we ramp up in the third, fourth quarter. So this would be pretty damn brief, But the bearish is, the president just said July, August. We were thinking April, May, or at least I was thinking maybe April, May, which was still, so maybe he spoke out of turn or whatever, but that's what caused that little afternoon sell-off, in my opinion. I think, reality, we're trying to say, okay, our kids are home from school, and it's crazy. They're all asking many questions. That's a whole nother avenue I'm not going to go down because I don't have time to do that now. I'm doing a recap of stocks. But kind of thought, hey, maybe after April break, the kids go back to school. We salvage lacrosse season, track and baseball, and then maybe they go to camp and everything starts opening up, thawing out. We have a little bit of a summer, and then the fall is normal. That's the big bullish argument, which seems to be fading a little bit. But don't lose hope in that. We'll see. Anyway, let's get back to the markets. So and then the next spot right here was a 200-day. Remember, I talked to you about the 200-day dance. We had 28.55, which was your pivot low. Even here too. This was so after 1, 2, 3. I sold a lot of puts into this. I remember that. We were the Oscillator was minus 125. I sold it on this day. I actually sold the 290s, and it played with me all day. And finally, I was able to keep that. And then right here, we played with the 200-day. And if you guys remember, in here is when I was ranting and raving that why wouldn't we test 28.55. Right around here was when I started doing kind of my research on Europe, my cousins in Homeland Security, and I was talking to him, and he was telling me how Milan, 18 million people are confined, and how any minute now it's going to be in Rome, and that Spain's a problem, Portugal's a problem, Greece, everything's a problem, and I'm thinking, we're 12, 14% off highs. Why wouldn't we at least test that low? So at least if you're in cash, in my trading accounts, I told you the 4 accounts, which I was basically in cash, out of this whole time period, that was my biggest short position, just trying to put 2 plus 2 together, or 5 plus 5, saying, hey, here we are, right on this, it was this day, okay, why wouldn't we at least test 28.55? Okay, so that's when I started buying the VIX at 27, 29, the SPY 300 puts, whatever. And then lo and behold, had them for the following Friday, and then on this day, which was that Monday. We were down to 27.31. Sold all the VIX, sold my puts, and then was back to more, just more level. And that wound up being about, looking from here to here, that was a good 40 points or so in this. And so that was a nice catch on the short side. I caught this, I didn't get hurt on this long or a little bit, and then this was my juicy short. And then since then, I've really been more trying to buy in the hole, after making a new low, not buying on Friday when we're up 8.5%. That's not the time to buy. The only time to buy where I feel like you can trade out of it is if you're down 3-4 days, oscillators are at a new high, or we're about 2,000 points, Dow points below the prior low. So for now, if you look here, probably not the safest, at 2401, not the safest spot to be long, in my humble opinion. Some guys went long on the close. If that's you, that okay. So instead of going long on the close at 2401, I'm thinking to myself, where wouldn't I mind owning the SPYs if we happen to gap up for some reason? I have no idea why we would. Where I wouldn't mind, I don't want to miss something, but I don't want to be long just in case we're down another 1,000 points or 1,200 points in the Dow or 10 points in the SPYs. So I mapped out this area where, not 2351, which we're really right there, which is the October lows. I said I feel kind of comfortable buying the SPYs if we see 2200, okay, which is here. So if I happen to, and I'll probably add to it if we go down fast, if we happen to get to S&P 2200, which is 35% off the highs by Friday, I will own the SPYs. I will own the 22s, and I also have the 210s, which is a little bit below. So those are what I'll own. If by April we see this area, which is all the way down here, which you can't rule out anything, then I'll own the what's it called? What I buy? The one that just sold the 180s. So instead of buying here, thinking, hey, we're crazy oversold, we're almost near the 2018 lows. I said I don't even like it here. I kind of like it down here, but I'll do it with a plan, and then maybe down here. So that's why I sold some of those puts. So a lot of people were asking, why would you do that? Isn't that risky? Isn't it horrible to sell naked options? It's definitely not for everyone. I trade all day long, okay? And sometimes instead of putting on a swing trade into inflection points, I'd rather, go out and sell it underneath so I have room. Maybe I don't make as much on the bounce, but at least I know, just I have a little bit more, just a little more slippage, if that's what you want to call it. Can we see lower than 1850? You never know. Do we see lower by April 3rd? That could happen too. So you have to know what you can handle. For me, I know that with my buying power, if I get put that, then I could double, triple, quadruple up, trade around it. Even today, the SPYs hit a low, or the S&P hit a low of 2401, and we rallied 120 handles off those lows. There's a lot of movement, so you don't need to do that kind of stuff to make money. 247 was the Thursday low. That was our pivot area. So if we go to the SPYs here, first of all, this is 220, which does seem a lot closer than it was before. And then 180 is all the way down here, which I'm going to wait now. I went into April. This is like this area right here. So if I can't, April 3rd, holy shit, what's that? Not even 2-3 weeks out. If I can't feel comfortable saying, okay, give me the SPYs here, I've been doing this for 22 years, I can. This, by Friday, we'll see. So anyway, you go back to the SPYs, and this too, very, very methodical, guys, very, very technical. You put all the noise out of the side, and you try and match up with a few things with common sense. I did a lot of little videos from the car on a Friday or a Thursday, or talking about connecting the dots, talking to different people out there, just trying to get the edge, of what's happening, and just trying to see it, and if you remember, when I was talking about how Italy was in mass hysteria, we were still going out to dinner on a Friday and Saturday night, and I was at my my kids' basketball tournament with thousands of people, and that's when I was like, guys, my cousin's telling me we better friggin' wise up, and that was when I was like, holy shit, I can't really be long much, I better be careful here, and I was trying to tell you guys that the same way, but that was all the way down here. But we already knew, we broke the 8 and 21 day, knew the gap didn't get a fill, knew the 200 day was lost, knew that we had to retest this, broke below, and then the rally was nothing, and we've been below the 8 day. Look how extended we are from the 8 day now. So I'm hoping we get some kind of revision to the mean, which doesn't have to happen, but it would be helpful. Now what do we know? This is all we know. The low of today is what? 237.36. That is the low of the day. Okay? This no longer really matters. That mattered today. This was your line in the sand. Every day there's like a rubber match spot where you can make trades. Okay? First time we went to Thursday's low, I actually faded it. Because I'm like, we just went from 237 to 247. I think, it could pause there. And I made like $2-3 fading it there. And then we held, and the next time I'm like, we get through to there. Next time it's going to be a buy because it just held higher, and people are going to get, people are going to have to cover, and then we'll see if 255 to 257 is resistance. Why would that be resistance? Because that was like the halfway mark from the other day. So if you go to the 1 minute, the 1 day chart, I'll show you what I'm talking about. So right here, this could have been your day trading money. Besides buying in the hole after the, after the what's it called? There was after the halt. So here was your move lower. Okay, this was your first. I actually did not buy into this. I did not buy into this. My bids were 234.5 down to 232.5. Why were those my bids? Those were the 2018 lows. I'm being careful. I'm only if I'm putting bids in, in a key area on a wash down, I'm doing it to levels that I think I could trade around. So I was a little conservative, but that's fine. Conservative is what is keeping me alive, and you need to be conservative to keep you alive. So here, made the low. All right, broke this little downtrend. I guess you could have looked at this little bull flag right here, right? Bull flag. And then you could have been a buyer right here. So that makes sense, right? This little active sequence is not the, hold on, let me see if people are trying to get to me. So anyway, you didn't even have to, buy this. You could have waited till it went sideways and bought that for a trade, but then it would have been good to know right here. This is where I got short. The 247.50 was Thursday's low. Where could you have seen that? You go sideways. Where is that low? Right here. So you got to connect the dots. That's how you actively come up with your plan. So right here, after, having a good little fade after a 10-point move, I covered a little bit, but then what did it do? It held where it broke out from. Then it went sideways now for literally 90 minutes. So now the prior low, which was right here, turned into an actionable buy, right? That's why I flipped long on the what's it called, on the VTF. I actually tweeted to Redler All Access because this was a strategy. I bought 247.50s, and then I told you I trimmed some at 250, and then I trimmed a little bit around 252. I didn't catch it all the way up to here. But then again, why did I do that? Because I figured, hey, this would also be some resistance, which was the prior support going sideways. So it was resistance, and then it held higher, and then it made another move. So right here, this was a very methodical, tradable, technical move without having to have any risk overnight. If you're a day trader, if you're an active trader who trades for a living, and hopefully that's, I have the majority of you guys here, and that's how you can make money tactically. And I tried to do, and I did. I came in, I cut my losses from overnight because I had some small leftover longs from overnight from Friday. I sold a lot into it, but I still had some, and down, 9% hurts. So I cut my overnight losses to about half, which I was pretty happy with because I closed on the high of my quarter, which matched my best quarter from the fourth quarter, in full disclosure. But anyway, if you didn't have to be in any of that to all of a sudden, either get long right here for a trade, that right there could have been your day. This little trade from 240 something up to 247 couldn't have been your day, and then from 247 back to what? This was 242 could have been your day, or right here if you waited and said I'm going to give it to 90 minutes or an hour, that could have been your day. So there's lots of spots that could be your day without being in 10 things, trying to be like a big head honcho and trying to talk about, trading a gazillion things. You could trade the SPYs and you could trade one stock probably very similar to this, the same exact way. So anyway, that's like a tactical lesson for everyone. Besides the macro levels of maybe positioning long term. Again, I told you that my professional tactical cash flow hat is different than the long term hat, and is different from being on Fox Business and talking to the world hat. There's a lot of different hats. I'm not even wearing a hat. Thank goodness I don't wear a hat because my forehead is so goddamn big. Imagine I wore a hat and my hair didn't breathe. I'd be freaking bald. Anyway, not that bald is bad. Bald I heard is sexy. Anyway, that's that. Let's go back to the 1 year. Where are we in this chart? Oh. Where are we now after? Okay, so anyway, that's that. So the Qs, let's just go right to the Qs. Closing the dead lows. Here too, broke the 8-day, big gap down, rallied to resistance, rolled over, lost a 200-day here. So now what do we know for tomorrow? Wow, this is done now. Goodbye. This is no more longer a point of reference. Actually, it is. It's the day before. Oh, this is what we did this morning. So we used 169, which it closed a little bit below. This was your prior level. Got, tried to go through it, gave it a push, and then went back below it. You get out. You do not do, you don't marry these things. The slow here now is what? This is slow. 169. This is 169. This is 169 also. That's a little off, or maybe it's just lower after hours. 169.16. Qs aren't even at the October lows. I mean the 2018 lows. 169. All right, hold on. I'll go over a few things from the BTF when you ask. Boeing was broken. Boeing has been broken since before goddamn, way well before this. But anyway, just because Boeing, because it's a name, doesn't really matter. Citigroup was a name. LBS was a name. Continental Airlines is a name. Just saying. Anyway, so tomorrow we'll see what happens. We open up near 160, which correlates to right here, or are we working our way down to 143? Here's where the 8 days were very stretched. Every time we've gotten to it, it's gotten rejected, and now it's definitely into here. You're into that. Hey, why don't you sell the 140s? I bet you if we get down to 160 tomorrow, or a little bit below, maybe I'll sell the 140 puts, just because I wouldn't mind getting them there. But we'll see. We'll see how it opens up. Okay, then you have to see, does it get rejected here at 176? So if it opens up, maybe you have an H cell set up at 176.94. If it opens below, does it get below and stay below 169? And then I would wait to 160. You don't want to buy it too early just to see if that's a level. And if that's not a level, then we'll see. So that's like my thought process. And I'm trying not to get too caught up, and I'm trying not to feel like I missed anything. Yeah, imagine, Boeing could be Lehman. That's interesting, Tom. So let's get to Boeing. Wow. Boeing broke below the 200-day right there. I remember this day. It broke below the 8-day and the 21-day and the 200-day. I think guys were trying to play it. I was actually playing it a little bit in here, and I was like, guys, why are we playing Boeing? It's a battleground name. Why did the plane blow up? Is it their fault? Is it not their fault? Blah, blah, blah. Every night something different. I'm like, it's not easy. There are easier things to trade. And then right here is when it broke, 366. Then stayed below. You had to move rejected at the 200-day again, and then boom, you had literally either you're selling the 340 or you had this chance to sell it when it broke this 300 level. Look how long this support was going. So if you didn't get out here, or get out when it failed there, or when it broke again here, that was your spot. And now look, holy cow. Wow. Yeah, this is something you should be watching every day. This was your last point of reference. It's 154. Now your new point of reference is what? Holy shit, 128. 128 is all you know. 128 is today's low. What does it do tomorrow? Does it open above it and trade below it? Does it open below it? Does it reclaim it? And it's very dangerous. Very dangerous. Very leveraged. Very, obviously, the whole airline industry on it. So here's 128. Is it getting close to a level? That's what people probably thought when it was at 240 or when they at 190. That's why I'm saying it's not a time for individual names yet, because these things, like, they do look like they are lower than they were 3 weeks ago or 4 weeks ago. They're still a lot higher than they were in 2018 and most of them in 2016. I'm just saying. So they're not like a crazy value levels. Boeing looks like it's at a crazy value level, but it's trading as if it's going to have problems with a bankruptcy. Anyway, 127.64. Okay. What's this low? This is 115. Hold on one second. Let me just tell my wife that I'm alive and I'm doing a recap. Hold on. Okay. So honey, I'm doing recap. Talk in a bit. By the way, I was supposed to be on Fox Business today, and I got friggin' pushed out because of the president, which makes sense. Everyone will much better to hear from them than me. So this is 128. This is all noisy levels now. We don't need to have these in here. Really, again, the spot was right here. And I can even make this into even a more major, you know, wedge. And then really, there's the 200 day. It was playing with it, playing with it, playing with the distribution, above it, below it, above it, below it, above it, below, then boom, and then never looking back. That's what the market could do to you. This is 120-ish. It's bone for you. I guess if it opened there tomorrow, you know, can you get a trade? Maybe. But again, be careful. This is a pressure cooker. This is high yield, bankruptcy, all over it, unless it gets some kind of save and some kind of bailout. And again, look where it was. This was 2016. So Boeing just came back to where it was in 2016. So it's not like it was, you know, and it was there for a while. So you could probably even go back further. So, you know, Boeing was here in 2014. So this is a big base. This is worth a look. I mean, yeah, you know what? Maybe I'll look at it tomorrow. If it's down there. Versa level. Makes sense. Didn't even pause there. This is 120-ish. This is another level down here. Wow. I remember people saying, "Oh, I'm buying Boeing versus, you know, 320. I think it's a value play." It just came in from 440. So did 319 look good? Yeah. That's what we have a lot of in this high beta tech land. That's why I'm a little concerned that yes, although it looked great at 440, or not looked great, or it was at 440. Remember, by the way, look at this breakout failure, and then it stayed below. Another signal. Well, you know, although it was 440, 320 looked good, but then you have to look all the way back where it came from. That's why I'm still a little, you know, I'm not saying everyone's like, oh, should I buy Apple? Do I buy Amazon? Do I buy Tesla? I'm like, I don't know. It's either we're going to be close to a bottom and those are going to get a nice bounce, or we're going to bounce and then we're heading down another 20% in the indices through the summer because the president said July, August, which maybe it's not. Hopefully it's not. I hope it's not. And those things could see lower. So that's why I don't think you start legging into stocks yet. If you leg into some indices slowly, longer term, that's fine. Like I did say, and I wrote, you know, I have a 401k that I did not go to cash. I'm putting in money every month. My son's 529 that I started at age 5, not age 1 like I should have. Okay, I upped it on Thursday from 500 a month to 750, down 27% off highs. I feel like that's good. Even if this goes a few more years, or whatever it goes, I'll you know, be okay. He's not 16 or 17. And then my wife's cash account that she had from UND&J when she converted from a state employee to her own practice, that's been sitting in cash ever since I put it in cash about a year and a half ago. I'm like, okay, I have a full cash account. Let's use this as a barometer for you guys, because a lot of you guys have been sitting in cash for a bunch of years. So I'm like, this is what I'm going to do. So at 15% off highs, I put in 25% of it, a little early. And then I put another 25% in on Thursday. Thank goodness it was on the day we closed in the lows. So half of her account is now back in S&P index fund, and half of it's in cash. The other half I'm going to be very, very cautious with. I'm not going to be putting it in probably until at least 2,200, not touching it at 2,350, or at 1,850. Or if I might just wait till 1,850 just to be safe, because, you know, I'm not in a rush. Again, this is 4 weeks into this scenario or whatever is happening here. We're not 6 months or a year in. You know, kids just started their detention at home, you know, today or Friday, and it could be 4 weeks or more. It's a lot going to happen, guys. Jesus. Anyway, that's Boeing. That's why, look, if you look at Apple on the same time frame, although it felt like, you know, oh my God, I didn't get stuck at 327, you know, 240, or I was waiting for 233, that's there. 220 is here. And then this is really 215 as I'm looking at it with you. You know, in where was this? In 2019, it was still at 180, so it's not even back into this area. And it has, you know, every retail store is closed in the U.S. You know, granted, you know, they just opened in China, which is good. We're going to follow that, but, you know, granted, just saying, this doesn't look like I got to mortgage a house for it. It looks like it's getting cheaper, but not like, holy cow, I am going to miss, you know, this crazy once-in-a-lifetime opportunity for Apple. That's what you should be looking to invest in individual names. If you're like, this is a once-in-a-lifetime thing, oh my God, I can't miss it. Then but that you don't have to be doing that here yet. We're still only 30+% off highs. We could be 40 or 50. Then these things will be like crazy. You know, just my 2 cents. I'm just going through it with you guys. Again, but this is when it broke day in 21 day. This was when the gap didn't get filled. That's when this ascending channel broke and the whole entire trade changed on Apple. This is when I was crazy bullish. I was buying it, I was holding it, I was buying it, I was holding it, I was trading it, and then this changed, and I haven't done it since. I've been just here, trade here and there, trade here, short a little bit here, buy a little bit, versus a little there, and now this is where we are. It's a bigger picture. So 233, is your next real level. What was today's low? 240. So here's 233. We'll see what we're talking about tomorrow. Maybe it's there. This is 220. I guess this is 215. This would be an interesting area. Look how this is where it broke out from and then held, this is a pretty big area. But still, if it sees 215, which is what, 25 points below 240, I'm going to be sweating a little bit on those friggin' SPY 220 puts. Let's hope it doesn't happen between now and Friday. That I sold. I didn't buy them. I'm not planning for it to go down. I'm planning for it to stay above 2,200 by Friday. But after today, it looks like I'm going to have to figure that out. Wow. Amazon, the same thing. Remember Amazon, boys and girls? When I loved it. I loved it here. And then going into earnings, I had options up to yin yang. It was one of my best trades. And then I was buying it here. Okay, remember that. What's it doing? It's above the 8-day. What did it do? Consolidate, held a gap after earnings, meaning power, held above this 2035. Then into this, I remember I tweeted, I'm like, I'm out of it at 2170 for now. Just felt like getting out of it. And I thought, look how extended it was too from the 8-day. So I'm like, okay, 1, 2, I'm out of it. Then on this day, remember I had the call spread. When it broke 2125, I'm like, you know what? I'm out. It's trading 2125. I have a call spread on. I could salvage 40 points. I'm done. And then by that Friday, it was below 2100, so anyone sat in it and waited. Okay, they had a 0. I like to collect my money when things look a little wishy-washy. And then I haven't really played this one since, because for me, I know my style. I know that this thing fluctuates a lot. I'm not like DP and some of the guys in the chat that put some bids in lower and make some good money. I'd rather do that. I've done that with Apple and Microsoft a few times, or I've done that with the spiders a few times, just because I like a little bit more liquidity and just my nature. Versus, I know, a few thousand shares of Apple, you could do a few hundred shares of Amazon. But again, everyone has differences in their mentality. So anyway, today it was one of the better ones that bounced. What do we know now? What do we know now? This low here. What's this low here? It's 1626. So 1675, which is what we knew. Today is now 1626. And here is 1570. And this, to me, is going to be the key. This, to me, if this happened fast, then maybe I would sell some longer-term puts so I could either collect income or buy it there for my swing account. That's a spot, investors' wise too. That's like, wow, okay, that's a pretty big spot. This was like kind of an overshoot when the market had a lot of momentum, when growth was there, when we were in a perfect world. In a perfect world, that's when you're above the 821 day. That means earnings are good, there's momentum, people are buying things, not giving them much room to the downside, there's not a lot of pain, and you could buy high and sell higher. This is not that. This you could only buy in extreme situations with a little pain, and then or reverse a level, and then sell some, hold some, and then trail it, and if it doesn't work, get out. And then try and fade versus a prior low where it hits resistance. Anybody still watching me on the VTF, or you guys all tune me out yet? Am I boring? I'm boring. I feel like, I don't have a teleprompter. I'm sitting here in my Shortles office. I only have a little bit of my Dunkin' Donuts coffee yet. It's Monday. My wife's all over me. She's like, you didn't go to the city yet today? I'm like, I told you I wasn't going to the city. She was crazy yesterday, too. She's like, okay, if you go and you take your car, take your Perel. I'm like, I got my Perel. She's like, don't let them put makeup on you. I'm like, what are you talking about? Like, I know you say that your forehead's too shiny and that your eyes look a little old, but you don't know how many other people the makeup artists put makeup on. I'm like, okay. And then like 5 minutes later, she's like, you're not gonna let them put makeup on. I'm like, calm down. I'm like, it's freaking Sunday night. Let's not talk about whether I'm gonna have makeup on at 3:45 tomorrow. I might not even go in, and I might get bumped by the president. And we're arguing about this on a Sunday. It's like, God damn, pick and choose your battles. That's what we're gonna have to do. Moving forward, pick and choose your battles. Don't fight over stupid stuff. If anything, pick up the yes dear card. Yes dear. Or if you're, a female subscriber, yes honey. Or yes, I don't know, what do you call a spouse of a man? I don't know. What do you, if, with Jody, if you had a, you know, your spouse, what, I'll say yes, honey, yes, dear. Is it the same thing? No. Anyway, let's just continue before I get in trouble. What else? I had Twitter overnight. I tried it to trade around it, and then I got out of it. Um, Something I feel like I've been able to handle. I was using this 26.75. It closed on lows, so maybe we'll try again tomorrow. 22 broke. 26.50 was kind of a big area, and it broke. I go out, or I'm not allowed in. Scott, I have to change my clothes every time I go out, or I am not allowed in. Interesting. What's this low here? This low here is 23.92. Maybe we try again tomorrow. 22. Jeez. 23.92 tomorrow. I feel like I'm so early on all this stuff. I was talking about what are parents going to do, you know, the working, this, that. I was on top of the whole China thing, the whole Italy thing, and then where it was spreading. I should be retired, but then I wouldn't be here with you. Just goes to show you it's hard. Even if you have like indication and maybe a little trader buddy on your shoulder saying you should be doing that, you should not be doing this, you know, you still have to listen. And although I feel like I've been navigating well, considering some of you guys think I'm a perma bull, and we are 30% off the highs in the S&P, and stocks have been annihilated, and I'm on the highs of my quarter, just one day off it. You got to be okay. But just don't think about all the trades you have. Like DP was talking the other day also. Like, remember, what if we would have held the VIX options that we owned at 27, 29, 33, and 34 that we scored on from $1 to 5 to 8? Like, you can't look back and say you would have had 25 of this. No way you would have sit in it. Same way with Tesla. We weren't sitting in it until 900. We took a lot of trades along the way. But then you don't want to get caught at the top anyway. So don't look at the trade you had. You know, be happy you booked some profits and you can move on and revisit. Right, Barry? Or Josh? Yeah, the T-VIX. My God, yeah, you had options on that. Anyway, I had the friggin' 300 puts on the SPYs. I think I had it until this Friday or last Friday. I don't even know. And I just was like, oh my God, 300. We're down to 273. It's 27 points. That's a great trade. So if you have a good trade, don't think about what it could have been. Just book your profits. And if it happen to not happen a lot, just trail it then. There's a lot of bad trades out there. And if you had a bad trade and you held it too long because you thought the market was going to save you, you know, definitely write that down too, because market's not going to save you here and there, and that could also take away your last 3 days or your last few weeks. You know, look at this. Like, look at MGM. Look at these names. Holy cow. Look when this broke the 821 day. Look when this broke the 200 day. Oh, wow. MGM. Back to 1022. I'm sure there are people who said, hey, it was at 32. I'm going to buy it at 24 on this pause right here at this level. This was the level, right? Stopped here for a second. Oh, you know what? I'll buy it at this level. You know, you could try it here, verse 22. Try it. And then if you tried it here and it didn't work and you said, oh, that sucked, I lost a little bit of money, could you have lost a lot more? I think so. So paper cuts, I'd say this all the time. Like, I feel like I'm in that type of market. Paper cuts hurt, meaning you're buying something versus a level, you're buying it a few times, you're losing a little bit, losing a little bit, losing a little bit. Okay. One of these days you're going to catch a trade that actually you buy versus level and it goes, and then it holds in well, you add, and then it goes more, and you have a really big trade. The other times when you're like, oh, I'm going to buy it, I'm going to keep buying it, I'm going to keep buying it, and then all of a sudden it goes from 22 down to 10, and then you capitulate it out of 10, you just lost a bunch of weeks of trading. You don't want to do that. Maybe this is a red dog reversal tomorrow as I'm looking at it. Jesus Christ, look where this is down to. This may be worth a look down here, actually. Steve Wynn got the luckiest thing ever. I hate to say it. He got forced out of his stock a lot higher. Some guys are just, you know, I don't know. I don't want to say it. Wynn is closing down some areas too. Look at that. This is dangerous stuff, guys. But look at this. This was your wedge. This is below the 200 day. Do you buy things or hold things that are below the 200 day? I guess I must have wrote this then. No. Look at that. It's a process. As a trader, you follow a process so you could stay in business. Even as an investor, you have to have a process. Otherwise, you're not going to have money for when things happen like this, and then you're like just holding your nose and waiting for them to come back one day. And some stocks never come back another day. I don't know. All right. I think I went over enough. I'm going to try and do as much as I can over the next few days, few weeks. So there's some talk that the New York Stock Exchange is going to close on Wednesday or so, but it looks like they put a lot of measures in place to collect your temperature, to check your temperature and this and that, so that might stay open. So that's a good sign that maybe the market will stay open. There's a lot of talk saying, hey, when times are stressful enough, and why would you keep the market open if we're supposed to be indoors and go nowhere for 2 weeks? And then you have kids that are anxious, and the spouse who's home is anxious, and why should whoever's doing the stuff in the market have one eye on the market, one eye on over here, and they should just be like relaxing and letting this thing pass. So there's both sides of the coin on whether the market should stay open or not. I don't have a strong opinion. I'll do whatever is in front of me. If they close the market, I'll try and make the best of it and spend time with Chase and Selena and keep them optimistic and do whatever we can to stay sane. And if they keep it open, we'll do what we can by coming in and trading where we can and picking compelling spots, and wait for other really real compelling spots before putting more longer term money to work, and continue to follow the news flow and figure out what does the market know, what doesn't it know, what's priced in, what's not priced in, what's the bull case, what's the bear case, what's the buzzwords, what can we look at as a leading indicator. With all that said, have a good night, and I will see you in the morning.